Folks, in this video, I'm going to talk about smaller growth stocks gaining full steam ahead. Now, over the past few weeks, we've seen the Nasdaq large cap stocks take a breather due to potentially inflationary risk down the road. And many investors are asking if this is the end of the wild bull run we've been seeing in the past market over the past decade. My answer to that is simple. I believe the bull market is just getting started, especially with the massive stimulus bill that was just approved. Now, if you look at most indices, they're either at new highs or near new highs. And the only stocks showing some stress are stocks that have gone up tremendously during the stay-at-home environment that's been heating up large cap tech since the lockdown started 1 year ago. Now, many investors are concerned that the pullback in large cap techs will spill over into other sectors. And my response to that is simple. I believe that we've merely seeing a very healthy correction. And once the next quarter earnings come out, and assuming they're better than expected, investors who are nervous about the earnings per share yield on large caps will feel safer about the return versus the yield from the bond market, which has been rising and causing pressure on the techs. Also, over the next few months, I'm expecting momentum levels to subside, to cool down, which needs to happen before large cap techs can propel substantially higher. But for today, I want to talk about two growth stocks that I'm targeting right now, and I believe they'll show significant outperformance to the overall market over the next few months. And these are smaller stocks, so they're a little bit under the radar. They're Russell-size stocks. The first stock on my list is Sonos, ticker symbol SONO. Company offers charging cradles, music players, alternating current adapters, controllers, wireless speakers, and loudspeakers in the US, Europe, and Asia Pacific. Last month, the company reported first quarter 2021 results that were impressive, very impressive. Revenue was at $645 million, which was higher by about 15% on a year-over-year basis. The company closed first quarter with a cash balance of over $678 million and zero debt. Now, the stock trades at a market capitalization of about $4 to $4.5 billion, which tells me it has substantial upside ahead. The one-year return for this company is 315% plus. Earnings per share growth versus previous quarter, 620% growth. Earnings per share growth versus previous year, 80% growth. The stock is trading near all-time highs. It's had 4 positive quarters of earnings estimates and surprises, and a price target of $47 over the next 2 months is reasonable. And as I said previously, I also like the fact that the company is part of the Russell 2000 index, which is the fastest gaining index out of the major ones at this time, and focuses on smaller companies that have massive upside potential. Let's talk about the second stock on my radar. It's Piedmont. It may be pronounced Piedmont or Piedmont. Either way, it's a lithium company with a ticker symbol PLL. This is a mineral resource company, and I've talked about this stock before. It engages in the identification, acquisition, exploration, and development of resource projects primarily in Australia. Estimates suggest that global lithium demand will more than double by 2024, backed by strong growth in the electric vehicle, the EV industry. A multi-year bull market for the electric vehicle industry also implies sustained demand for lithium. Now, this company is a supplier of lithium hydroxide, tongue-tied there, which is used in lithium batteries. The company has a 5-year binding agreement with Tesla. That's right, Tesla. 1-year return, 951+%. Can you imagine making almost 1,000% on a stock in 1 year? That's crazy. The company has a market cap about $1 billion now and shows substantial upside over the next few quarters. The price of shares dropped from a high of near 90 to a low of about 50 in the last few weeks. And now the stock is trading at $74, and I believe it's headed back to testing the old highs over the next 6 to 8 weeks, if the rally in the smaller stocks, as we're seeing now, remains intact. The stock has five strong buy recommendations, and I'm projecting a target of about $95 per share in the near term. Russell 2000 stocks have been outperforming the broad market for several months now, and I'm expecting this type of upside to continue because they've been lagging behind the S&P for several years before this overturn in momentum has begun earlier or late 2020. It's been going on for about 4 or 5 months now, and I think it's going to continue for the rest of the year. I hope that helps. Folks, let me level with you. The stock market is unpredictable. There's no doubt about that. That's why you need a trading strategy that'll net you consistent returns year after year, no matter what life throws your way. Luckily for you, I've come across a trading strategy that could bring you some calm during the market storm. And we've been seeing a market storm over the past few weeks. Now, this stress-free strategy allows you to capture more gains when the stock rallies without leaving large profits on the table. And it works even during the most turbulent markets. You will not want to miss out on the next trophy trade. Click on the link below to see how you can access this trading strategy today. Make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post our next video.